Hello and welcome to this video. Today I'm going to be doing a stock analysis on Snowflake. Now, if you don't know what Snowflake is, it is a data storage and data analysis company. So this means that if you're a company saying you need some storage space in the cloud, you can buy it from Snowflake and you can use their servers, and they also help you analyze your data so you can optimize your workflow or whatever. And they do, which they're quite good at, which is also why I'm going to focus on them today. And they are not, I wouldn't say the biggest player in the market because they are in the same market as someone like Microsoft, but they are quite interesting. And I think they are there's the genuine tech below, and their data centers, which also are going to include AI in the future, is going to be quite interesting. And I see them as they're going to be a major player in the future, I think. Now, if we take a look at the stock over this last period, you can see it hasn't been performing that great. As you can see, back in 20, February of 24, so basically a year ago, it was up and trading all the way up in, what is this, 237, which means it, and as you can see down here at the bottom, it was all the way at $137 less, which was quite crazy. And you can see here after their earnings, which is quite interesting, they actually were surprised by 92%. They fell quite a lot. Look at this huge gap in the stock here. As you can see, there is a gap in the stock here where we don't see the candles touching each other. So yeah, quite interesting. We have this big gap here on an earnings. Now, we did see however, back here in November of 24, it was gaining quite nice increases. As you can see, another earnings report up 39%. Then it did the opposite. It jumped quite high, and we have another gap in the stock. Now, for those of you who don't know it, these gaps mean that either pre-market or post-market, there is quite high volume being traded, so it starts up way higher or way lower than when the market was active. And these are quite bad for a technical analysis because it makes the technicals a bit more uneasy to read and can also give false positives on buy and sell signals. Now, if we look at where the stock is trading currently, we can see it did trade down here where we have seen a bottom before. Let me just draw so you can see. As you can see, oh, that was the wrong tool. It was this one. As you can see here, it did trade here where we did see we have a bottom here. And we also see that we have a smaller bottom down here, but as you can see, this is a spot where it flattened out a bit, which we can also use as a signal because it flattened out right here, which is basically what we're at now, which is a support line, and we can use that as a reference point from where we are trading now. As you can see, we did trade upwards again above these 166, and then we fell down. So if we trade more sideways here, we are going to have another support line here, which we might break through. Then we are going to have to, the other breakthrough point we have here is about yay high. As you can see, we do have some fake outbreaks here trading on that line, but we don't have any we don't have any real properly signals on this, and that's because, as I said earlier, it is quite volatile. We do, however, see the stock signals here again. If we go further back, as you can see, so they do repeat themselves sometimes. Now, let's see on the earnings. As you can see, the earnings, we did see some back on the Q1 in 24. They missed it, but besides that, they have beaten it these last few times, which is quite nice. And they are also earning money per share now, which is quite nice. Now, annually, as you can see now, they are burning money, but this is just because they're investing quite nicely. But the thing I like with this company is you see their revenue and their negative net income grow not as much as you see. Their net revenue increases more than their net income falls, which is quite nice. As you can see, the margins get better and better. Then we have a bit of an outlier here where it increases, but you get the point. This means that they are gaining more and more customers as they are investing more and more into their product and their software and their servers behind, which is of course a reason to invest in them, for customers to invest in their product, so you can get in and use their services, because this means, of course, that there are something true behind it, which is one of the reasons I want to highlight it today. Now, if we take a look at the seasonals, there's not that many to go on as it was publicly traded in 2020. As you can see, in 2024, we did have quite a poor year, minus 18%, then in 22, minus 56%. But besides from that, and then this year, where we are minus 4%, it has been quite nice. Now, it did trade up quite nicely. This year was up 22%, but then it fell down quite a lot, as you saw earlier. And then we have 21, 2020, and 2023, where it's been performing quite decently. A thing I like about Snowflake compared to other tech companies is it's actually impressive. It hasn't just shot up a couple 100% in some years. because it is relatively new on the stock exchange, where we often see 100 and 200% in a year, like Palantir or other companies within this relatively same niche, which I think is quite interesting. And I like that it doesn't just explode that much, because this means that the speculates in the stock is not that great. So yeah, I like it quite a lot. Now, if you look at the technicals, as you can see here for the day, it's a sell. For the month, it is still a sell, sadly, because as you can see, we did have this death cross here, and then it's just simply tumbled all the way down since. So even though we did see some positive here, we haven't seen enough positives. Now, if this didn't tank again on Friday, we might have seen a hold or a neutral. If it continued up, as we might have had a golden cross here, but I will, of course, won't speculate on that because we can't say for sure. So currently it's a sell, and I personally won't buy into this until it trades a bit more evenly here, or it falls a bit more, or it gains some upwards momentum. I prefer to trade when it's an upward momentum, or they are laying flat for some time, and the technical says it's a buy. Now the analyst rating on this is 40% up for the year average at $210. Now I think that's quite reasonable. As you can see, we have 32 strong buy, 5 buy, and 9 hold, and not a single sell or strong sell, which is quite extreme. Now, as you can see, the max rating here is 235, and the worst one is 156, which is just about what we are currently at. So quite interesting that we don't see any sell or strong sell. Now, annually, if you look at their estimated earnings, as you can see, we can also just see that they increase year over year over year, and so does the estimate, which is quite nice, and I like that quite a lot. And as you can also see here, down here, the total earnings per share surprise, this is how much positive it was or negative. So each year they actually make more money than they anticipated the year before, which of course means that estimate, let's say this is the estimate for the year, it's gonna be higher than this, which I like quite a lot. So chances are, let's say the surprise is 20%, then they would actually end up having earned like 1.39 or something like that. So quite interesting, as you can see. Now, that was my study on Snowflake. Now, if you did like this video, please don't forget to like and subscribe.